New York Stock Exchange gap open down is about as long. Look at this list. Look at this beautiful bear gap down. Why is it? The market was so overbought in a 10-day rally. Jobs report were out on Friday. They gapped those futures down on Friday. They came in, the bull with the zero rational exuberance came in buying an overbought market on the gap downs and still remained elevated in the overbought zone. Italy is about to collapse, or so they think. Greece, we just went through it. Portugal's on deck. Spain is going to be a big one. And that is going to be an overhang on the U.S. market. Bull cycles, bear cycles, pre-market future cycles all have the same type of deal. What I'm showing here today at 1.00 and higher, where 60% of your program trading goes on, and here are the companies. I can show you how long the list is. It's going on forever. Oh boy. Why do you think we said it's time to be short? The Dow was down 131 handles this morning. S&P is down 1760 right now. NASDAQ was down 32 handles. It's improved. It's only down, and those futures down 27 handles. Dow is down 119. It's come off those lows. 12,496 is a future tape. NASDAQ futures 2379, now down 29.5 handles. S&P down 17.4 handles. That's a 1.30% gap down. Crude oil is down as well today after making big run-ups. But let me tell you something. Today, Alcoa is a kickoff in these earnings. Are they willing to use the discount model in their bull rally? They used a discount model at 9.2% unemployment rate on Friday. CMG, we featured yesterday. It's on our home site. We said that that stock was so overbought that it was the greatest shorting opportunity ever. And it's down 3.51 handles. Because stocks got way ahead of themselves. And the bull doesn't understand what an overbought market is. It reminds me in some cases like 1999, in some cases, in some of these pre-market, a gap open, gap up. Let's go to the gap open up on your little NYSE. You've got one qualifier, AGR, Arch Chemicals Inc., 4.71. Other than that, for as big as the NYSE, and you don't have a 1.00 or higher gap open, look at that. There ain't none there. None. Why? Let it be known. If you're an innocent bystander watching this video, maybe you should have some check and balances about your own self-exuberance. Because short-term exuberance has consequences. Trade management is to shake out that buyer and that exuberance. There is little short interest in the indexes, and there's little short interest on stocks right now on an intraday level. That means that when we come down and hit that support level at those lower markets, is that bull going to jump in? And is the USA earnings that start today? It's a lighter week today. You got Google coming out on Thursday, which we've done. We did a lot of work over the weekend to be prepared for it, and last week about how to get short at the high and some names. Whether the indexes are done or not, there are 4 stages to a market top that the new MMTs in this group learned how to buy the bottom when it didn't want to go lower. They learned how to do that. Now they're going to learn the opposite of what a top is and what those 4 stages to price volatility tops are. But how they start to build weakness. We are going to have more volatility. We are going to hit a peak in volatility. The earnings are going to create roller coaster gap pre-market volatilities in certain sectors. Let it be known. The poor little investor, the standard day trader as we know it, they can't keep up with the electronic execution, artificial, high-frequency volume machines that do lots of trades. Our platform is already priced those people. We can deal with it. But the normal people, as the norm has always been, no, it's not. And part of this exuberance isn't all humans either. Part of it is artificially. However, if you do not know how to wade through it, you do not know how to take advantage of it, you can get severely hurt. And risk management is risk management, and people don't know how to apply the proper risk management. Risk is at a high level. When you get to an overbought level, you need to be selling out. When you get to a very extreme oversold level, as we had in the last 10-day trading period, which was a great bull 10-day rally, is you got to know when to buy that oversold position. And you've got to know when to be squaring in and when to be squaring out, and you have to have full comprehension. Today's trade management on the NYSE, where 60% of your program trading goes, is when they come down to that lower support level, and if they're not bouncing quickly in your SMF platform, then you know that the move is very weak and you're going to come down to the lower market level until you finally do hit that point of that lower market level at support where they're going to bounce. Once they do bounce a 3, 6, 9, 12 movement up, as they will, you'll be looking for that distribution, that sell bar right next to that big green bar. When it breaks half of the SMF bar and gets below it, you know the short's on. Let it be known. Let it be known. Let it be known today, on this day, as we start the earnings season, live here in pre-market, live here right now, that you can see, and you'll have the total history of how this gap open down is today. I mean, this gap open down here is a mile long. Margin debt, short-term cycle, margin debt cycles is where people get bullish and buy on margin. They gap down below it. Their broker has to call them and say, hey, time to sell. We'll see if that's in play. The lower that it goes, and the more people that were buying at the high end of the last 10-day bull rally are the victims to that. The other culprit is that because of that 10-day rally, when we had all that short interest build up in that last 7-week correction, it wasn't until the last 2 weeks of the 7 weeks where people started building a lot of shorts. It took them, the bull never gave in for 5 weeks. As it kept going down, they just kept holding, buying, and they kept making lower lows until we finally got to that plateau of being extremely oversold in the cycle and the huge bounce. If you're looking for success, then learn how to deal with what makes success. It's not easy for the general public to be able to maneuver in these kinds of markets. However, I am a firm believer, if you are going to be in the market, then you better get educated right. And I don't think that all of your standard day trading models as they once were when we started those things up in the 90s. I am sorry, there has been a big change in this decade, and we'll be doing a special documentary on it. We'll be doing a special documentary on it so that people have a way to wade through it, free of charge, only because we care about people who are in markets. But you got to care enough to help yourself. Gap open down on the NYSE 7/11/2011 earnings kickoff with Alcoa. Can the U.S. come in and change the bull or bear sentiment?